Good afternoon. Good afternoon, everyone. I'm Bagadon at Stock Market Caddy, and it is March 8th. March 8th at about 1:17, and the markets are running. My wife and I founded StockMarketCaddy.com years ago, and we have two levels of membership. We have a monthly membership for the swing trader, the option trader, for the working person, and then we also have an annual membership for the person who is the swing trader, the option trader, and the working person who doesn't want to be working that much longer for someone else and working full time for themselves as a trader, and also a futures trader. But I want to show you something. Let me scroll down. Every night we post a video on the markets. And last night, you can see it was highlighted in red, March 7th, 2022. That's a little cue that we put on there when the market is in a bearish tone. But notice what we wrote in yellow. Contract roll coming up. Fed coming up. Squeeze long likely. Now I'm going to play for you just a few minutes of what we told our members last night. Now, not only did we share with them some market insight, but we take our time with our members because we want to demystify these markets and help teach them how to play their own game. So if you're getting it done wherever you are and you're learning, great, stay right there. But if you're merely just subscribing to somebody to get a list of calls and puts for you to randomly choose, and some come in and some don't, and you're not learning anything, then maybe you want to, make a change. Let me play this for you. Hi everyone, it's Don. It is March 7th, Monday at about 9:34 p.m. And today was a down day from the open, and it was down all day. Very, very dark day in the markets, and finished on a low note as well. I just want to be sure that I remind everyone of where we are. This period is known as contract rollover, right? So we've been trading. Let's make sure we get the months right? January, February, this is March. Okay, so the March contract that we've been trading, the H contract, will officially be dead on the 18th. It will roll on the 11th, which means that the next contract, June, whatever letter that will be, the June contract will start trading more volume than the H contract on the 11th, which means that the days of the H contract are numbered. So anybody who is short the H contract, which is a whole bunch of folks, right? A whole bunch of stuff. Now for pros, it won't matter. They can do this seamlessly, but history has shown us that when the market gets either extremely extended up or extended down, but especially down going into a contract rollover, the market is susceptible to a squeeze, in that even though they may want to remain bearish, they have no choice but to buy the contract to close. Now it's kind of a moot point if they roll right ahead and short the June contract, but many times that doesn't happen. So this is prone to a squeeze. But we are also we're in a unique period with what is going on with Russia. Now, I'm not one to get caught up in the narratives, as we've talked about. But what is important in this from a market standpoint is what is happening with the economic system of Russia and what we're doing as a country to lock down their economy. So we see a tremendous run in oil, a tremendous run in gold, a, um, a collapse in the ruble, and basically have shut down their economy, which is about a 500 billion, I think 600 billion. So when you do that sort of thing, it may feel good. It may feel like the right thing to do, and maybe it is the right thing to do. But when you're taking that type of um, liquidity out of markets, there are other entities that are not involved in the Ukraine deal that have counterparty risk. So if Russia should default, just says, hey, we can't pay you back, we're not going to pay you back, well, that, will be on them, I suppose. But the counterparties, who's holding that risk? The old saying that if you owe a bank $1 million and you don't pay it, you're in trouble. But if you owe the bank $1 billion and you don't pay it, it's the bank that's in trouble. And our country is a banking cartel. It's a banking cartel, with the dollar reserve system and, and the whole 9 yards. So we're not going to go down that road, but the economic impact, the fallout from shutting down that Russian economy cannot be underestimated. All right. So I think technically we're set for a bounce. My instincts tell me that we're going to bounce, but I'm holding a punch back because of the very special circumstances we have. Now, Susan and I, we did buy a call option on the S&P at 42.10 when it was trading at 42.10. Now, it went down considerably and has bounced back tonight. We'll see what we have. And we have that call. It has about, I think about 25 days, 26 days on it. We did not sell a call against it, so we didn't create the spread quite yet. Maybe we should have. It was looking like we did, but we could always do that again tomorrow. So I'm thinking bounce, but let's go through our systems and see for ourselves. First thing is Nicholas. Well, he's not showing us any hint of a bounce. He's short the Russell since the 28th, the ES, all the 28th, 4,000, 8,000, 17,000, 5,000 in long. So I'll let you do the math there. That's quite a bit of money, right? About 35, 36 some odd $1,000.